Hello everyone, this is Hacked.com joining you for our weekly webinar series. My name is Sam Borgi, Chief Editor to Hacked. It is February the 2nd, 2018, just past 10 p.m. Eastern Standard Time here in Canada. Wherever you may be joining us, thank you for logging in. What a week it was in the market. Many of us are still recovering from the massive sell-off that we saw in cryptos. Our goal now is to dissect what happened, why it happened, what went wrong, what went right. Is everything being blown way out of proportion, or can we expect more pain as we head into the first full week of February? So that's really the context that underlies our current webinar. Of course, we are very timely. We monitor the market virtually all day, every single day. The agenda, this is your first Hack.com webinar. Know that we like to keep it pretty basic. We're going to give you the weekly overview. We're going to cover the global cryptocurrency market. We're going to say a few words about the developments on Hack.com and then draw your attention to the major themes that could impact your trading heading into next week. So, the big news, of course, this whole week was that the cryptocurrency market experienced another epic collapse. More than $100 billion was wiped from the market over the past 7 days. Still nowhere near as big as what we saw in mid-January. But the difference here is that we haven't been seeing the same tendency to buy on the dips that we saw pretty much at any major correction over the past year or so. So the crypto market shed over $100 billion. Really, there were, I would say, legitimate reasons for the pullback, as well as some illegitimate grievances as to why the market is in the state that it's in as of February the 2nd. We know that Bitcoin fell below 8,000, Ethereum fell below 1,000. We saw Ripple drop, I think, around 85 cents, and lots of coins fell out of the billion-dollar club that I've talked about before. And there's both legitimate and illegitimate reasons as to why the market is reacting this way. Now, when we look at the legitimate reasons, or the actual tangible reasons why investors are being a little bit concerned about the market, of course, has been the record valuations. The crypto market in 2017 has been described, or was described, as one of the biggest bubbles of all time. It really did defy logic in a lot of ways. So many of us were expecting a pullback, a correction, perhaps followed by more sustainable rallies later on. So valuation concern is a legitimate grievance. There's also the grievance of the widespread cybersecurity issues impacting the crypto market. I mean, the market is, I would say, heavily infested by hackers. And a recent study by Ernst & Young showed that even ICOs, about 10% of ICO funds that have been raised, at least in 2017, have been compromised. We have seen many cases where funds have been stolen, brokers have been hacked. Over the past 4 years, something like over 3 dozen brokers have been hacked. Billions and billions have been lost. CoinCheck is the most recent one. Heist of 500 million NEO coins. We also saw B token just this past week, I believe Thursday. B token, which is one of the most highly anticipated ICOs. Its investors were hit with a phishing scam that cost them $1 million. So these are just some of the I would say, legitimate reasons why investors are concerned about the market. Of course, there being a regulatory gap is another cause for concern. But a lot of this epic sell-off that we've been seeing has been driven by news headlines, fear-mongering, essentially fake news. We saw that this week. I woke up here in Canada. I woke up at Thursday morning, and the market is on fire. And I'm taking a look at my news feed, and I'm seeing that lots of news sources are talking about how Bitcoin is going to be banned, or there's going to be a witch hunt of Bitcoin in India, essentially. The Indian government is coming after Bitcoin. It was a bit weird for me hearing that, because India has said pretty bluntly, we don't recognize Bitcoin as a legitimate form of money. Why would India have to go ahead and then talk about banning Bitcoin more when it's already classified as an illegitimate form of money? So I did more research. I looked at some of the transcripts of what was said by the finance minister, and he mostly talked about wanting to target illicit use of Bitcoin for black market activity. right? Because India has been, under Modi, has been targeting black market activity. That's been in the news for at least a few years now. So nowhere did he say that there's going to be a witch hunt on cryptocurrency traders. Will India adopt a more comprehensive measures in the future? Maybe. But this week, we didn't see any talk about any kind of attack on crypto traders in India. We already know the status of cryptocurrency there. So there's a lot of negative and misleading headlines. And in fact, I wrote an article on it on Thursday. It was an op-ed piece telling everyone, just relax, guys, just relax, because there's a lot of fear-mongering going on from the mainstream media, many of whom want to have a vested interest in taking down cryptocurrency. And many of them, probably don't even know what the space is about to be reporting on it. So the same thing happened last month with South Korea. I mean, one of the ministers in South Korea did say that we need to ban cryptocurrency, but his comments were immediately rebuked by the president's office of the country that said, no, we're not going to be banning cryptocurrency. We may consider that, but we're also considering a whole bunch of other measures. And lo and behold, on January 30th, South Korea implemented a ban on anonymous trading accounts because they believe that could limit speculation in the market. So no ban in South Korea. There was no such talk in India this past week. So be very mindful of those news headlines. And we don't want to get caught up in fake news. Bitcoin, here's the chart. You see the declines pretty much all year long. Interestingly, Bitcoin did rise sharply at the beginning of the year. It did join in the global crypto rally that took the market to 830 billion plus, but it was still nowhere near record highs because Bitcoin peaked at around 19,500 or so back in December. Overall, we've seen multiple broad sell-offs throughout the month. Bitcoin just recorded its worst month in 3 years, and in terms of monetary loss, probably its biggest loss of all time, over $40 billion in market cap shed during January. Of course, we talked about B token in terms of controversy. We talked about CoinCheck. The US CFTC, the commodity regulator, has also subpoenaed Bitfinex and Tether, which some of you may know and many of you may not know that they're actually run by the same dudes. The same CEO who runs Tether also runs Bitfinex. This is generally no problem. But Bitfinex, or I should say Tether, is under some scrutiny right now because it may not be what it says it is. Supposedly it is backed by US dollars, although the extent of those claims have not been verified. And there is some speculation that it is creating new coins in order to prop up the value of Bitcoin to mask or hide the solvency issues going on at Bitfinex. So it's a little bit more than just hearsay. There is something to it. We covered it this week on Hacked. Check it out if you are interested. The global cryptocurrency market, as you see, as at last check was around 420 to 430 billion. We crashed at around 350 to 360 billion on Friday, which is way less than half of the all-time high. So the market has been roiled, of course, due to the headlines as of late. That was cryptos. We also keep track, of course, of the stock market. We also cover currencies, commodities, Forex, and we also include these in our trade recommendations. Stocks declined something like $1 trillion this week on Wall Street alone, capping off their worst week in 2 years. The Dow fell over 600 points on Friday. The volatility index, called the CBOE VIX, rose to its highest level since 2016. It actually rose around 30% on Friday, hitting 17 plus. The CBOE VIX trades on a scale of 1 to 100, with 20 representing the historical average. So while the VIX is still below the historical average, it is trading well above levels that we've seen over the past year or two, where it's been mostly between 10 and 12, even between 10 and 15. So the market fell. The decline was it was stoked by, believe it or not, the U.S. jobs report. The non-farm payrolls report on Friday was actually quite positive. Non-farm payrolls rose 200,000 on the month, much higher than expected. But what investors were really paying attention to was average hourly earnings. They rose at an annualized rate of 2.9% in January, which is the fastest rate in over 8 years. That signals one thing in particular: inflation. Obviously, we know that when inflation rises, the Fed is going to perhaps move with more diligence to raise interest rates, because by raising interest rates, we can, blunt some of the demand for cash and for investments and for debt, and that could limit the rate of inflation growth. Now investors are betting that the Fed could raise rates at a faster rate than previously expected. They are expected to raise rates in March, which is their next meeting. It'll be the first meeting chaired by the new Fed governor, Jerome Powell, something to keep an eye on moving forward. So that really talks about stocks. We talked about cryptos. I just want to give you a brief recap of the week that was at Hacked. ICO analyses continued this week. We are ramping up more over the weekend as we continue our research. The most read articles of the week include $50,000 Bitcoin may come sooner than you think. That was one of the articles I wrote earlier in the week, talking about some of the speculation around 50,000 Bitcoin being possible even as early as this year. I know a lot of the more bullish recommendations also say Bitcoin could hit 25,000 this year, so there's just some numbers to keep in mind. A trade recommendation involving Ripple was also quite popular. Good news on low prices, which was an article written by Raiden. The article on Digix there, which was I developed that, I believe, on Thursday. Essentially, when you looked at the top 100 cryptocurrencies on Thursday, the vast majority of them were down double digits, and all of them were down except for one, which is a Digix DAO, and we covered that in an article that received quite a bit of attention. So we like to cover the altcoins as much as possible, especially those that are moving in one way or the other, in significant patterns, I should say, or in significant movements. A long-term crypto analysis was also among the most popular articles of the week. Moving into next week, of course, the main question is going to be crypto mania. What's next? Where do we go from here? Do we continue lower? Do we consolidate? Or will there be a rebound? Regulation, there's going to be a lot more speculation on the regulatory aspect. Who will it be this time? Will it be India? Will it be China again? Will it be South Korea? Always keep an eye on the regulatory developments. Has the stock rally lost its luster? I believe stocks will rebound again, but the epic collapse this week, or the massive decline this week, has made us a little bit more weary about how this market could evolve. Earnings continue, and the ICO craze is also well underway. That's not going to change anytime soon. That covers it for this week, everyone. I hope that it's been informative. We greatly appreciate your time. Visit us at hack.com for more. If you want more trade recommendations, ICO analyses, news analysis, and coverage of the crypto market, you've come to the right place. Hack.com. We'll see you there. If not, today is February the 2nd. I will see you again on our weekly webinar series on the 9th of February. Take care. Have a great weekend.